Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified. So what are we going to talk about? Well, got a lot to talk about this week. First of all, I want to talk about the methodology in action. We've got some mystery chart follow-ups, and that'll make sense when we get to it. I want to follow up on what I talked about last week, and I think this can really be an ongoing thing, and I think it's very important for me and for you to wrap your head around, and that's understanding what you're really trading through understanding yourself. And we'll get to that in a few minutes. I want to talk about what might be the Holy Grail of crypto. I was in the pitch yesterday, and the pitch show, that is, and I talked about this being the possible Holy Grail of money, of crypto, and I think it's something I really want to elaborate on quite a bit, he tried to say. Housekeeping, I do take requests. It makes my job a lot easier knowing what I'm going to cover ahead of time. If it doesn't fit into this venue, which is a limited format, limited time slot, limited amount of time, I could certainly work it into my weekly show, which I do every week on Thursdays, Thursday nights that is. And you can go to daveliner.com/webinar for more on that. Register even if the date is old. I keep forgetting to change the date, but the date will probably be old on that. Register there. If you need to contact me, daveliner.com/contact. And if you want the slides for this presentation, limited access to the members area, and a plethora of other stuff to keep you really busy for a long time, including all 3 of my books in PDF format for absolutely free. Get to know me first before spending any of your hard-earned cash. And just put your information in, daveliner.com/StockCharts. One thing real quick, I guess the elephant in the room is the fact that the market is becoming a little iffy in here, and the presentation was almost pretty much done, and then the market starts coming unglued a little bit, of course. One thing I would recommend you do, and I was asked yesterday a little bit about market timing, and I didn't have time to get into it in the pitch, but one thing I would recommend you do is go in and watch the show I did on market timing, and the name of that show is Before the Bomb Blows Up. And if you put your name in an aforementioned link, daveliner.com/StockCharts, you also get access to a free market timing course. So I think now might be the time to brush up on your market timing. All right, let's take a look at some of these mystery charts in here. Here's a mystery chart reveal. It's AMPL. This was recommended in my trading service recently. And you guys often ask, where do I get all these mystery charts? Well, first, it's through my analysis, but second, I would say 99% of them come directly from my trading service. And you can look at the archives of that at www.daveliner.com/archive. So this was a really nice trend, relatively new issue, nice little deep pullback, which I like to see in IPOs. Entry here, stop down here, initial profit target up here. So let's see what happens. Not much. And as you can see, it never triggered, and I took it off as an official setup. So no capital was put into harm's way. I know I beat the dead horse quite a bit on this, but I'm shocked at how many times waiting for that entry, waiting for the market to go back up, will keep you out of trouble. Here's another mystery chart update. In fact, in this one, I'm going to show you something that a trader has never showed you. A guru, that is, has never showed you. Here was the entry, the stop, and this is straight from my trading service again. Nice little thrust higher, nice little pullback, triggers here, stop is down here, initial profit target up here. Let's see what happens. Stop this out at a loss. It happens with a silent SH. I think it's important for me to occasionally, as painful as it is, show you that you can lose money trading. And I guess right now you probably know that if you've been trading markets recently. Here's a crypto pair. This is not a mystery chart. I mentioned this in yesterday's The Pitch. Notice that you've got really nice Landry light in here, meaning the lows are greater than the moving average. You can see that's illustrated down here. By the way, speaking of illustrations or illustrated, I like to see my indicators at least as illustrators and not indicators in and of themselves. It just helps to illustrate what's really going on in a chart. And I always like to start with a blank chart first. As I said, and again, not the last week at Bandcamp you, but as I said in the pitch, when you go from green to red and red to green and back to neutral with Landry light, as we did throughout this period here, it means the market is chopping sideways. When you start getting some green, it means the trend might be developing. And when you get some red, it might mean a trend might be developing to the downside. So for upside, green means, again, lows are just above the moving average. Right now, my favorite moving average, I know you don't have part of me, is the 30 EMA. So nice trend higher as evidenced by the Landry light. Almost came all the way back to the 30 EMA. That's one of my setups, the what I call Landry light pullbacks. But I will trade a pullback even if it doesn't get all the way to the 30. Sometimes the ones to the 30, though, can be really, really lucrative because the market has had a really substantial correction. Anyway, I entered here, and this, again, was mentioned yesterday in the pitch. I still think it's a viable setup, at least at the time this is being recorded. Stop down here. Initial profit target up here, so we'll see what happens in real time. Here's another one that's not a mystery chart because I mentioned it yesterday in the pitch. Nice uptrend. It's an IPO. Nice pullback in here. Entry was there. As you can see, it has already triggered. Stop down here. Initial profit target up here. The reason I mentioned it was I still think it's a viable setup. Now, truth be told, I am long, so maybe I'm talking my own position, but I do think it still has potential. When we last left off, or more accurately in the last episode, I was talking a little bit about how we're trading traders and not markets, and quoting Tom McClellan's mother, paraphrasing a little bit. Some traders trade when they have money, some traders trade when they need money or sell when they need money, and others use methods that are slightly more sophisticated. And the bottom line is, again, we're trading traders and we're just looking for that greater fool to come along and buy the market higher than we bought it. As I've been saying, being cognizant of your own emotional behavior that has nothing to do with the underlying markets will help you to wrap your head around the emotional and irrational nature of others and the market itself. And I can't beat the dead horse enough in this. We're trading traders and not markets. Now, here are a couple things that I'm willing to admit, at least, that happened last week. Some trades that might have nothing to do with the market. Some traders double up, fat finger, in this case, when having a heated debate with their spouse. My wife called me yesterday, a day before, I forget. Anyway, she said, hey, these guys are looking to get together for New Year's Eve. They're going to rent a house down on the beach, and they're going to be there like Thursday, Friday, Saturday. Which day are you off this year? And I was in the middle of placing some orders, getting out of a trade, and I was like, well, let me look. And so I go to NYSE website, and I see that I'm not off for New Year's. Not the day before, not the day after, no day. So I began getting frustrated because it was at that moment I discovered that's one less day off I get a year. Now, no woe is me. I signed up for this life, but it's definitely a must be present to win business. So I'm still in the middle of trying to get this order off, basically trying to get out of a position. And then my wife wanted me to explain why we didn't have that day off. And she knew occasionally that I don't have that day off. So my wife kept asking me about the rules for NYSE. And I don't know the rules for NYSE. I didn't create these rules. And I'm still pissed off because I've got to work New Year's Eve and I don't get New Year's Day off. Well, it's a Saturday. But anyway, I don't get a day off. And I'm like, why is she peppering me with all these questions? Well, no offense to you women, but you have a lot of questions. And then I was later figure out the reason she's asking me all these questions is because she has to tell her friend why I can't make it. And she has to explain to her. And I'm like, well, just tell her I have to work. And she's like, well, why are you off? And we went back and forth quite a few times. And it got really heated and ugly. And by the time at the end of the conversation, I noticed that I had doubled up on an order that I went to exit. And then it got me thinking, boy, that had nothing to do with the actual market. Now, some traders don't take a gift horse when lunch arrives and later sell at a loss. We were cleaning the garage. We have a house guest coming, and we were cleaning up around the house, cleaning the garage and such, and it came time for lunch, and I came in here, of course, to check in on the crypto and see what's going on. This was on Sunday. And then my wife says, okay, well, I'm going to go run and get some lunch, and I put on a pair And within like a few minutes, I had a 20% profit target. It was only like $1,000, but I had a 20% profit target. I was up about $180 literally in a couple of minutes. And I'm like, Dave, even though you're not up that 20% that you hope for, why not take that gift horse trade? And while I'm sitting there debating that, my wife shows up with lunch. So I didn't want to keep her waiting, but I'm also thinking I could sit here and watch this thing. It's like, you know what, Dave? Just go have lunch, and when you get back, then you can make a decision. I already had my limit order in place, so if it kept running, I would get out, and I had a stop in place just in case. Anyway, when I got back from lunch, I ended up selling out the trade at a loss. And my original plan normally is, I should say, is when there's a gift horse type of trade, something that is just too good to be true, a really fast move like that, I take the profits, the partial profits that is, bump my stop to break even, and then let the chips fall where they may. So those are just a couple of examples of things. I know there's plenty more, and plenty more that I don't want to admit, but the bottom line I'm getting to is that we're very emotional and irrational beings, and the market is made up of a bunch of emotional and irrational beings. And sometimes through technical analysis, we could read the mind of the market, so to speak, know where people will likely buy or likely sell or likely be forced out, and we could use that to our advantage. And the bottom line is we're trading traders and not markets. And just think about your own behavior when you're trading. What's emotional, what's following the plan, what's not following the plan, and why are you buying and selling? Mark Douglas once said that all it takes is one a-hole to screw up a perfectly good trade. And that quote sort of haunts me every time I place a trade. And if you think about it, you being a market participant, you have a little bit of an influence on the market. In some cases, more than you might think. Your stop order or your limit order or your market order, whatever the case may be, might be just enough to push that market one tick higher, and that might be a place where some selling might get triggered or some buying might get triggered. As an example, I often think of myself as when I'm placing options trades, I use a limit order to get in. I believe in market orders for the most part if I really want to be in a market, and stop entry orders if I'm following a plan, such as a Landry-like pullback. But when it comes to something like option orders, you can't really use a market order, or at least I think it's kind of dangerous to do so. So I'll put in a limit order, and sometimes I'm trying to get between the bid and the ask, and I'll keep upping my bid. And every time I up my bid, I look back to the screen and I see the bid, and I think to myself, Dave, that's you right there looking to get filled. Or on a sell order, sometimes I'll move the ask down a little bit and I'll see the ask move with my order. And that's really a great way to kind of wrap your head around the fact that you have some influence on the overall market. Now, you're not going to sway the market one way, big or another, but it could be a little bit of that butterfly type effect when it comes to market. So again, all it takes is one a-hole to screw up a perfectly good trade. Mark Douglas, my brother from another mother. Mark and I were supposed to be in a project once, and it didn't come to fruition, and unfortunately, Mark's no longer with us. Womp womp. What a bummer there. But he was a great guy, from what I could tell, and I've learned a lot from him. Now, let's shift gears and talk a little bit about crypto. As I've been preaching through this show and my Dave Landry's The Week of Charts show, again, it's not about the crypto. It's about recognizing and capitalizing on market insanity and inefficiencies. Inefficient markets, such as IPOs, such as the NASDAQ and .com stocks way back in the late 90s. By the way, I forget the guy's name, but one of my clients pointed out on CNBC, not Mark Kernan, but the other one, as I said also in the pitch, not the last week at Bandcamp, that he said something that made a lot of sense. He said, we're either in 1996 with the crypto or we're in 1999. And I hope and I think we're in 1996. But again, it's about recognizing and capitalizing on market insanity and inefficiencies. As I've said 1,000 times recently, using that NASDAQ as an example once again, NASDAQ went up 400%, while a lot of people poo-pooed that and poo-pooed the .com stocks and all that. Now, eventually they were right because the NASDAQ came down 77%. So it's not about confusing the issue with facts. Would you rather pontificate or profit. And as I've been saying quite a bit, if you miss this possible incredible bull market, insanity, inefficiencies, bubble, whatever you want to call it, then okay, you might have your reasons, but what other ones are you going to miss in the future? And as I've said quite a bit lately, I've been reading on and off because it's not the most exciting book. Part of it's a pretty good, but the whole thing can be a little bit boring at times. Devil Take the Hindmost, which talks about the bubbles throughout history. I would recommend you read it. Just don't operate heavy machinery after reading it. But anyway, it's interesting in there that they talk about the South Sea bubble, but a lot of people got rich off the South Sea bubble before it eventually blew up. Now, don't let me get you into trouble with crypto. Make sure you tread lightly. Maybe I should say ask your financial advisor, who will tell you to stay out of it. And that way I'm off the hook. And as I preach, everything is for educational purposes only. Now, one thing it is about with the crypto is about applying a conceptually correct methodology. What's pretty awesome here and in other inefficient markets and insane markets and bubbles is that pullbacks and other core methodology setups tend to work really well. I, as you probably know, am a bit of a pullback player. I do have some breakout trades that I use in IPOs, but for the most part, I trade pullbacks, Landry-like pullbacks, TKOs, things like that, and to some extent, minor pullbacks such as you might get after a bow tie or a first thrust type of setup. Now, sometimes in rip-roaring markets, you could just buy the strongest. I have a client, I know I've said this 1,000 times, but he's paid for 2 down payments on 2 investment properties by simply taking the list of my Landry list, which is a list of stocks that I'm following, and he has a little app, and he'll just buy the first, or the top, I should say, 2 or 3 stocks during the day, and he would stay in those stocks all day. Now, that doesn't always work, but that works really well when you're in kind of a rip-roaring bull market and everything is just going up. So if most crypto pairs are up and making brand new highs, sometimes you can just go in and buy the ones that are making new highs. It's a little scary thing to do, but as I have said quite a bit, remember, we're just looking for that initial profit target, and I know you should never use the word hope, but hopefully be able to hit that target, bring the stop up to break even on the remainder, and ride out that trend for a long, long time. And I'll walk you through an example on that, and if you can't sleep at night, go watch some of the shows I've done on money management. Speaking of money management, money management, money management, money management. Probably the 3 most important things that I can tell you about crypto right now. So that leads us to our next point. Money management, the Holy Grail of crypto. Not the last week at band camp you, but that's what I said yesterday in the pitch. And I think this needs to really be fleshed out quite a bit. So as an example, this Avalanche, XAVA, made a nice little pullback, and I went in and when I saw this, when I was putting my slides together, and I was looking at a trade I made over here, which I'll show you in 1 second, I'm like, geez, I hope I caught this trade back here, and thank goodness I was able to find the trades, and I did. But you can see, beautiful Landry-like pullback. Didn't quite hit the 30 EMA, but that's okay, close enough for government work, and a lot of times, like this one up here, notice it still was a long ways away from the EMA, but when they go really high up here and stretch away from the EMA, I don't require the stock to come all the way down. Now, the beauty of the Landry-like pullback is that you can quantify it by having it come all the way down to the EMA, right? Scans for it, etc. But I just tend to eyeball stocks, and again, that was technically a Landry-like pullback, or at least I would consider that a Landry-like pullback. The buy was here. It's pointing to that second bar. It's actually on the bar, the first rally out of the pullback. And then within a couple days, I was able to exit half for partial profits, and that was a 20% initial profit target. Now, keep in mind that as the crypto market matures and gets a little less inefficient, you won't necessarily be able to use a 20% across the board initial profit target. But these things are ripping, so I figure right now, just to keep the math easy, 20% is a good target to use. Now, I did get stopped out right here. Unfortunately, I didn't know, or no one ever knows, whether it's just a pullback or not. and a slightly looser stop would have kept me in the trade. But I did see that it, once again, was set up as a Landry light pullback, or just a pullback in this case, I suppose. And I decided to get back in, even though I got stopped out the day before. And that's the other thing, by the way, is sometimes it's really hard to go back into a market. But if you have a beautiful setup, and you would take that setup in and of itself, forget about what you're trading. And the other thing, too, is here's the thing with crypto. It's provided me all these wonderful trading examples, and it doesn't matter what the market is, right? If you understand Landry light pullbacks, then go apply them to stocks or whatever market you want to trade. But anyway, I got in, and luckily that day I was able to flip out half at the IPT. And I'm still in this trade and trailing a stop higher. You can see my stop there on the right. It's about 12. I'm going to let it slowly loosen up to hopefully, and I know I just said hope, but hopefully be in this position for a long, long time. Now, let's take a few minutes and go look at some live charts, and I want to show you what I've been doing in real time. Okay, so as I said a minute ago, sometimes if you're in a rip-roaring bull market or a bubble, however you want to look at it, you could just buy things that are going up. And as I often joke, stealing a line from Will Rogers, if they don't go up, don't buy. Well, obviously you have to wait for them to go up first. But in this particular case, this one I just got long a little while ago because it was going up and it was making brand new highs, and we'll see how it shakes out. Now, here's the thing. You do have to be willing to be wrong a lot and stop yourself out if you are wrong and get out the way. But the good news is, even though breakouts are prone to failure, meaning that a lot of times breakouts don't work, somebody asked me to flesh that out a little further, and I think it's in one of the YouTube comments. The bottom line is, if you're in a more efficient market, everybody and their brother's watching the breakouts, okay? With crypto, it's a very inefficient market. In fact, I read or heard somewhere that only 4% of people in the world are trading crypto. I also heard from a friend of mine who used to work offshore, and he was telling me, he said, these guys are making like $200,000 a year, and they live fairly meager lives. They live in a trailer or whatever. And he said at nighttime, you can't find any of them. They're all in their rooms trading crypto off their phone. Now, here's the deal. I don't think they're using proper money management, or I should say, I'd be willing to go out on a limb and bet that they're not using proper money management. And I really think that these guys, not to pick on those guys in particular, but those guys can be, and guys like those, can be or could be our greater fools out there. Remember, all we need to profit from a trade is for some greater fools to come along and buy the market higher than we buy it, right? I know it's kind of hard to wrap your head around that, but we're trading traders, not markets. And as long as new money keeps flowing into the market, as long as greater fools keep buying it, then it'll keep going higher. And remember, right now at least, I'm only looking, again, for 20% per trade, and then I'm bumping that stop to break even. And hopefully, a word you should never use as a trader, I know that, but hopefully ride out the trend for a long, long time. So let's take a look at a few of these in here. Now, all I did was sort by percent change over here, but this would be a market that I might consider just buying it because it's going up. And I know it's kind of crazy to wrap your head around that, but sometimes that's how it works. Okay, now this one is going up. It's up 13%, but one thing I've been meaning to point out is if you don't walk away with anything in crypto right now, at least, is don't buy any pair that is not above the 30 EMA. So Luna, I was getting ready to say I would buy this one in a heartbeat, even though it's way up here at nosebleed levels. And I just realized I'm actually already long that pair. Okay, this is just plain old Ethereum, right? This looks pretty interesting. So I would actually buy this at these nosebleed levels, especially if it could be a little bit toward the top of this range. I think that would be an actual buy. I know, it sounds crazy, doesn't it? Now, quite a few of these, again, below the 30 EMA, there's nothing to do there. If you don't walk away with anything, again, not to beat the dead horse, something I would never do, is don't buy anything that's not above its 30 EMA. Look at this dot. You can see well below its 30 EMA, nothing to do, even though it's strong at the moment. Now, one thing I was thinking about longer term, maybe they might be something that'll set up that's at or around its 30 EMA. But for now, I'm not seeing anything, and I think that rule needs to remain in place. So again, a lot of these below the 30 EMA. This is kind of catching my eye a little bit. If this was kind of a huge breakout, getting well above that 30, it might be worth a shot. So I'm just looking for strength in these pairs, and if they're not going up, don't buy them. Okay, so now we're getting a little lower down the list. The moves aren't quite as impressive. So if we just sort them by symbol, let's go through a few and see if we can find some pullbacks or something that are worth trading. So again, above the 30 EMA, especially if we're trading a longer term pattern such as a pullback, and then maybe look for like a pullback to the EMA. Now this one just kind of went straight up. I did buy this what was that day? 1, 2, 3, 4. It was actually 5 days ago, and then I got stopped out, but it did pop up to the initial profit target before coming back in. This looks okay as a pullback. I prefer a pullback to have more than one day in the trend. So let's see if we can find something a little bit more textbook-like. And by the way, if you're learning how to trade, find something that does look a little more textbook-like, such as this AVAX, what we just talked about a few minutes ago. Nice Landry light higher, as you can see down here, or just eyeball the chart. Nice little pullback, almost to the EMA. Look to get long as it's beginning to rally. In fact, this thing, it looks like it's just getting started. I know I might be talking my position, but look for something like that. Look for something that's in a more established type of setup. And then as you become more and more comfortable, sometimes you might be able to just buy the ones that are, again, going up. Now let's go through a few more. And again, here we go again. Not to beat the dead horse, but don't buy things that are below the 30 EMA, and put your little Landry light down here. By the way, plug-in is free. All you have to do is like this video, because I'm guessing you like it if you want the plug-in, and then click on this little plug-in down here, and within a few minutes, you'll have it loaded up. And notice, for instance, Bitcoin, look, you don't want to be buying it down here when it's potentially dropping, but Dave, it went up. Well, you don't know what's going to go up. In fact, this recent little spill in here, I thought was going to possibly become something bigger, and I actually shorted it, even though I'm a bull on crypto, and that was kind of a hard trade to make, and ended up scratching out on it. But again, just wait for things, or make sure things are above the 30 EMA before looking to buy. So that's about it. Right now, I'm keeping it super, super, super simple in crypto, and I think that if you're just looking for pullbacks, maybe if you're a little newer to trading, focus on the Landry light pullbacks. And then also keep an eye on a relative strength, meaning just a day-over-day change. If something's really rallying, look to get long. So let's end on a high note here. I'm actually long this one. I might get stopped out soon, but I've been in and out of this one quite a bit. And I was talking with one of you guys a few days ago, and I have buys in my account all the way back to 25 cents on this one. This is Crypto.com. Not to confuse the issue with facts, but I think the fact that they renamed the Staples Center, or Crypto.com bought them out to rename it Crypto.com, is evidence that crypto is becoming more and more mainstream, or at least will. And guess what? A lot of greater fools are going to join in the fray. But you can see nice little pullback here, little TKO type setup you might have triggered in right here. Maybe that's where I got in recently. So far, that trade's not doing so well, but wait for this to re-trigger by crossing above that high. I might stop out in the meantime, and you might have a good little trade. So I think that's it for today. I appreciate you taking time out of your busy schedule to be here. Again, if you need to reach me, davelandry.com/contact, and you could also come to the shows on Thursday nights and ask questions live. If you would like the slides from this presentation and a bunch of stuff to keep you busy for a long, long time, davelandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.